Okay, so in this video, we're going to talk about trading terms. And in particular, we're going to talk about PDC, which stands for prior day close, PDH, which stands for prior day high, PDL, which stands for prior day low, PDO, which stands for prior day open, and PDHB, prior day halfback. And I'm going to show you how to put them on the charts. So without further ado, let's jump into the charts. So we have a blank chart here, and it is the ES futures. And to do this, what we need to do is go to studies, and we need to move down to the D, so with Daily OHLC, which stands for open, high, low, close. We're going to stick that on the chart, and what we're going to do is we're going to name these labels so you can see them. And now if you put them on as they are, right, that will actually do the current day, right? Now to do the prior day, right, you need to reference day back. So you change that to reference day back, and in particular what we're just going to do is just use the day session only. I'm going to show you how to do the overnight sessions data separately, and then we're just going to go back to these, and then we're going to name these the acronyms. So PDO, and then PDH, and then PDL, and then finally PDC. Now, why are these so important? Well, let's take a look at these values, and we also need to change that to that. So what I'm also just going to do is, just for reference here, I'm just going to take the evening session data off, so you can see them in detail. So that's your prior day high, that's there, and then you can see these in action. Now if we just go back to say for instance Monday, we have, and we're just going to move that so you can see it, so they're labeled up. So if you take them all to there, you got the prior day low there, and then you got the prior day open, right? Well, you can see that it was weak and it didn't even get above the prior day open, it didn't get above the prior day close or the prior day high, and then you can see it actually sold off. And you did get it cut through there, and then obviously you can see there it actually closed effectively at the prior day low. So you can see how these levels do play out. So obviously this is a good example here, right? So the prior day open, it came up, popped, tested to the open, and then sold off, and ended up back at the prior day low. So obviously you can see there as an example that's 38 points. So this is why we have them on our charts. So you can see you do get a reaction at these, because basically in a nutshell you're getting a lot of buying and selling at those particular points, i.e. at the close point. It's the highest volume of the day generally, and obviously on the open it's also very high volume. So it's just a point to note, and you can see straight away whether or not you're bullish. Now let's talk about how we put the halfback on there, right? Okay, so we go to studies, and what we want to do is do it via a spreadsheet formula. Right, now what we want to do is note down this. It's a little bit more advanced, but it's pretty simple stuff to do. Right, so what we want to do is take SG2, right, on ID1, right, so that stands for subgraph 2, and we're going to take the low away from that, which is going to give me the difference. So we're going to do ID1, and that is SG3, right, and we're going to basically then use the low, and we're going to divide these two by 2 to actually then give you the halfback. So let's, without further ado, let's do that. So what we want is we want a spreadsheet formula. So we want to do spreadsheet formula, study, And you can do this for anything, but in this instance, we're going to call this halfback. So I'm going to call this prior day halfback. We're going to put it in grey. Again, we're going to name the values. And then what we're going to do is we can do it for a number of bars. So we're just going to, and we don't want to show zeros in this instance, because that'll skew the chart. Shouldn't have zeros in this instance. So what we want to do is we want to say, right, first ID1, right, dot SG2 minus ID1 dot SG3. So that gives us the difference. I'm going to bracket that first. I want to divide that by 2, and then I'm going to add that to the low, i.e. ID1 dot SG3, and that will magically calculate it. Now you can see there it's actually put it in its own chart region. I want to move that back up to chart 1, so let's do that, and then you can see the halfback. So then you can see whether or not, as an example, if you use halfback to see whether or not we're bullish or bearish. Prior to halfback here is an example, and let's just move that along. You can see there we literally stayed above there for the majority of the day. We bounced off it quite a few times, so hence we do have this on the charts. Anyway, I just thought I'd show you how to put those on your charts and what those acronyms actually stood for. And I hope you found this video useful. If you have, subscribe to the video, and I'll see you on the next video. Bye for now.